Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades is Jason Brown, founder of thebrownreport.com and author of 5-Year Millionaire. All right, it is great to be with both of you guys. We'll hear from Rick in a minute when it comes to the charts. Okay, really quickly, though, before we get into your picks, I know you got just some little name on your list today, Nvidia. But I need to get your big picture take on the market because we hit a record yesterday. We're churning today as it relates to the S&P 500. Do you expect a little bit of momentum?
Here's the thing. Everything is pointed towards up. Geopolitical tensions are down. We had Fed Powell give us the gift of saying he's more likely to cut in September. And so everything is on cue to keep inching, I like to say cautiously higher. You never really want to let your guard down.
Okay, so you never really want to let your guard down. Let's talk about Nvidia. You still have analysts who are bullish on this one. I didn't get a chance to go through all your notes, so I'm not sure if this is going to be a bullish take. You tell me. The stock is a little bit lower off the back of its result. They beat. There's a little bit of concern about data center revenue. Tell me your thesis here.
Yeah, so here's the thing. If you look at what happened after hours, the stock was down about 5%. It rebounded. It's only down, if you just take a look right now.
Less than a percent.
Yeah, less than a percent. So take a look at the price action. You see traders are stepping in, buying it back up. From a fundamental standpoint, 46.7 billion in revenue, up 56% for the quarter, and then data center revenue up 56% year over year. And I've been watching the show this morning. Here's what I noticed: nobody's talking about the buyback. All right, $60 billion share buyback plan that was authorized by the company. So even if nobody else wants to own it, they want to own at least 60 billion of their own shares. And so I love what's going on here. They're also diversifying away from the hyperscaler, which is your Amazon, which is your Google and your Meta. They're selling chips to Saudi. And when you look at the big picture as a trader at home thinking about this, they hit these numbers without selling any chips to China in the last quarter, without selling any to China. So that means once we get it, I look at it like Tim Cook and what they were going through with iPhones being tariffed and taxed. We will get through this. And when we get through this, that's going to be all upside and all gravy for the stock. So I like it. I'm bullish.
Okay, so we'll go through your trade strategy in just a minute. Rick, what do you notice about this chart when you take a look at this one?
As you kind of joked, Diane, Nvidia is not exactly a mom and pop shop that no one cares about. It's a really important part of the stock market. So it's one that we've all kind of been watching with bated breath here. And when we look at the price action, it's almost kind of anticlimactic in some ways, I guess, because we topped out right around the mark near 185 that represented these old highs that we experienced already. But we haven't really seen a lot of net movement after some initial swings to the upside and the downside. Now we can see that price still, for now, remains above our yellow 21-day exponential moving average. That moving average comes in right around 178. That could be a short-term area to watch to the downside here. Notice as well that we have progressed beyond our upward sloping channel shape here between our two blue dashed lines. So we have given up that trend. You could draw a more shallow sloping white trend line here going across these lows and connecting here. So that would project potential support perhaps around 172 or so. A bit further down from there, we can see we had high and then low at our green line here, 165, matching up with our orange 63-day EMA. So those might be some notable downside levels to watch. As we look at RSI, our measure of momentum, we can see that we were experiencing some bearish divergence heading into this earnings event here. Price and RSI showed a mismatch here. Still below that trend line, still bullish, but heading downward and deteriorating a bit here. Volume, right around 180, that would be a notable area to hold. It starts to pick up again just above 170, and then the real heavy volume isn't really until you get down here near 145 or so.
Okay, all right, Jason, take us through your trade strategy here.
Yeah, and Rick, as you noted, those support levels are holding, and I'm looking forward to it building the base and breaking out. So I like this long term. I'm looking at going all the way out to June 18th, 2026. I like the 160 strike price. You're going to pay about $42 for that. Your break even is 202. You got 294 days for the stock to be above 202. Obviously, if it gets there before that, you got a little profit in there. And then also, I never like to give a trade without having an I'm wrong level. So if we get a breakdown below 170, we have to rethink our position, because the breakdown below 170, is going to take out that long bottom wick that we had about 4 or 5 days ago and challenge the 50-day moving average. If for some odd reason it breaks that, we want to rethink our strategy.
Okay, all right, let's talk about the next name on your list. It's another member of the Mag 7. You've got Microsoft on your list today. Your last one was a long call. What's your strategy here?
So Microsoft here, I'm looking at this as a bull put spread, and here's why. Sometimes it's not about where the stock can go, it's about where it most likely won't go. And Microsoft pulled back, well, first of all, when it had that great earnings, it popped up around 550, and then it sold off about 50 points down to the 50-day moving average. I know Rick will go through the technicals, but when you look at the backbone of what's happening, CrowdStrike, who announced their earnings, had some beats over there. I think Snowflake, who uses the Azure cloud to partner with their customers. You look at the Azure cloud being the backbone for Coca-Cola, for Walmart and supply chain, for healthcare. It's bigger than just corporations or end users who are just pounding on their keyboard at home asking ChatGPT prompts, although they're one of the biggest investors in there. So I love how they're executing on Azure. I love that they had a beat on the earnings, and we're just getting a healthy pullback to the 50-day moving average.
All right, Rick, take us through the technicals then.
If you were to look up in the dictionary the definition of a stock grinding higher, that's pretty much what Microsoft had done since our last earnings event here. Just this very just steady push to the upside here, following our blue trend line pretty consistently here. Notice as well that we did have this decline. Our low point came in around the tariff news shock here. Then we had earnings here. Price opened up back kind of within this range that we established here, this sideways price action that lasted for really quite a while here. So if we were to look at that level, that came in around 420, never even really looked back from there. So we can also see a couple of horizontal levels stand out now in the shorter term. First is 500, our green line here. High points, low points, that's pretty close to where stock bottomed out recently here. To the upside then, 520, our red line, that's the near-term ceiling potentially. High point, low points, and then we haven't really managed to test that area once again yet. For now, though, our blue trend line's been broken. Our short-term white downward sloping trend line starting off those highs, that's also been broken, though, so perhaps the short-term consolidated phase may be ending here as price holds on to this support. If the bulls were looking for that, they can see that momentum perhaps is also starting to shift toward the upside here. Trend line has been broken, but we are still below that 50 midline. So look for that bullish crossover to give further confirmation here. We can see volume node around 500, then around 520 to the upside. To the downside, more like 475 or so. Those could be other congestion points to watch out for going forward.
Okay, and then Jason, it's a bull put spread. Tell us a little bit more about the strategy here.
Yeah, so like Rick noted, you're seeing the stock bottom around 500. So it's not always about finding a new stock. Sometimes it's about finding a new way to play an existing name that you're familiar with. So I like the September 26, 2025, 485 strike price. You're selling that, and then you're buying the September 26, 2025, 475 strike price. So you're looking at a $10 spread, but you're getting a net credit of anywhere between $1 to $1.10. Those numbers might be a little bit off since the market opened, the stock's up $1. Your break even is at 484, but the bottom line is you're looking at a potential 10% return on this trade within 30 days. And if that 500 level breaks for whatever reason, you also have a built-in 15-point cushion. So you got some downside protection, even if it does break through the 50-day moving average, which it doesn't look like it's going to do. It's bouncing so far today. I like it, 10% in 30 days. It's what we talk about in my book, 5-Year Millionaire. That's a nice way to get it.
Okay. All right, let's talk about the last name on your list. We'll get right into both your thesis and your trade strategy here. You got Citigroup on your list. It's been an outperformer year to date. Take us through where you see this going.
All right, so stock's throwing a W pattern. You saw a bounce off the 91.50 level, and it's just trying to break above that 96 resistance. If we can break out above it, I think the stock goes higher. But they had restructuring during the Bora Bora plan. They restructured about 7,000 employees. They also rolled out about some AI tools, so about 150,000 of their employees. I like how they're controlling costs using AI, and they're emerging themselves as a leader inside the financial space. Going out long, June, strike price 87.50, June 2026. So you got about 300 days on that. It's going to cost you $16. Break even 103.50. I like the stock if it breaks out and continues to chop higher. It's consolidating right now, but they're doing the right things, and I think long term it goes higher.
Okay, Rick, you're up. What do you notice about this chart for Citigroup?
Actually, today, you know, I think maybe we could be breaking to the upside from that consolidative phase here, because if you were to look at our red line here, 96, that's the same level I had my eye on as well, because it represents this series of highs here and here. We closed above it yesterday. For now, we're hanging on above that level here. So these old resistance points can often become supportive areas to watch out for going forward. So that is kind of the line in the sand that the bulls would want to hold on to today. So if we were to look a bit at the bigger picture, though, for the most part, price was traveling within these two lines here, an upward channel between our two white lines there. But things were starting to slow down somewhat here. We were seeing momentum declining here, suggesting the pace of the gains was slowing. When you couple that with our consistent ceiling that we kept hitting, it showed that we were at this resistance level here. However, you can see that perhaps you could also draw a different type of trend line, more like that. That would give us more of an ascending triangle type of shape here, where we have consistent resistance and gradually higher lows here. In this case, it could be breaking out to the upside here, so something to also consider going forward. Support could be found at our yellow 21-day EMA here near about 94. Below that, we had a high and then lows around the 89 level or so. That matches up pretty closely with the 63-day EMA, so a breach of the 89 mark would be noteworthy as well. When we look at our other studies here, we can see kind of an interesting situation here, which is that there's a heavier volume node here, and price has pushed above it now. So we are above what would have been a potential congestion area there. So extra emphasis on that level near 95, 96 as support. Our +1 standard deviation channel comes in near about 98, 82, so just below 99. That could be an upside resistance area to consider in the coming days. Remember, that's just a snapshot from this point in time right now. It would be a moving target going forward.
Okay, quick 30-second final thought, Jason.
So again, you always want to have your I'm wrong level, 91.50, or as Rick said, around 91.80. You know, any in that way in that area. It breaks below that, you want to abort the trade and take a small loss and move on.
Okay, all right, there you go. We got guardrails around this one.
Gotta have
always, you always
gotta
have
them.
guardrails. All
you
right.
want to live the trade another day.
That's right. All right, that's Jason Brown from thebrownreport.com, and we also had the Duke of Data himself, Rick Ducat. Again, that's Jason Brown. Thank you so much to both of you guys.